What's up, everyone? My name's David Mirynech, and I'm the founder and CEO of FanClub Sports Capital. Very excited to welcome you to another edition of the Owners Club podcast. Every other week, we'll discuss all things sports finance, M&A, and more with some of the biggest names in the industry to give you a unique perspective and insight into what's happening in the world of pro sports ownership.
David Mirynech runs FanClub Sports Capital. All views expressed by him and the guests on his podcast are solely their opinions and do not reflect the views of FanClub Sports Capital. You should not treat any opinion expressed by Dave or his guests as specific inducement to make a particular investment or follow a particular strategy, but only as an expression of his personal opinion. This podcast is for informational purposes only.
What's up, everyone? Welcome to our second episode. We're going to be doing our 2023 predictions for sports finance and M&A. We're definitely a little bit behind on getting these up and running. We're also pretty cognizant of the fact that we've only had one episode with you as an audience, and so we haven't necessarily built up the kind of street cred to go out on a limb with some of these, but I also think that it's going to be fun to look back and just see how off we really were. So without further ado, let's get right into it. Prediction number one, drum roll please. More venture managers enter sports. So what's the reasoning for this? Well, a couple of things, I think. While we're seeing a whipsaw in the public markets and definitely seeing some of our favorite tech stocks and cryptos really start to rip to begin the year, we're not seeing that corresponding market sentiment in venture land. Because of illiquidity, private market venture cycles tend to be a little bit more prolonged. And the feeling in the industry from people I talk to just seems to be that we're still headed for another 16 months to 2 years of this. I think what you'll see is just a lot of top venture performers who killed it on the last market cycle might just wash their hands and say that they don't want to do it all over again and they want to go seek other life opportunities. And we're definitely seeing the narrative of sports as an uncorrelated asset and macroeconomic hedge being thrown out there a lot, both by ourselves and others. And I think there's a pretty compelling opportunity here, not just for some really interesting and sophisticated financial capital to enter the space, but also some pretty sophisticated intellectual capital to follow who may have ideas on commercialization strategies around fan engagement and technology that prove to be effective. So where's the data to back this up? Well, in December, Axios reported Jack Selby, the managing director of Peter Thiel's family office, and Jason Pressman, the managing director of the venture firm Shasta Ventures, also in California, offered to buy the Suns and the WNBA's Phoenix Mercury for $3 billion before it sold to Matt Ishbia at $4 billion. And Pressman and Selby were said to be putting together a group of about 10 people to help finance the deal, and that could also include financing from PayPal and Palantir co-founder Peter Thiel. I think this is probably going to be the tip of the iceberg. And I imagine we see a lot of activity in European football, maybe in some of those destination location clubs like Ibiza or Como or Cannes, so they have a place to enjoy in style. Prediction number two for 2023. As the shot clocks run out on SPACs, we see one, maybe two find a home, but that doesn't compel many more clubs to pursue this route. Now, I must admit, I'm already starting to be proven wrong on this one, as in the last few weeks, we saw the announcement of the Tech Store and Eagle Football Holdings SPAC plans. Without a doubt, it's going to be the canary in the coal mine in terms of understanding if this is an appropriate listing process and market structure ultimately for professional sports. And we discussed this ad nauseum on the first episode, so I don't want to rehash it too much here. Anyone who missed it can go back and have a listen, but I just feel like we've had too many failed attempts foregoed in favor of private equity. And once again, our most compelling data here is obviously the Red Ball SPAC attempt of Fenway Sports Group, which was eschewed for a more standard private equity investment. We haven't heard much on the Udinese and Watford transaction. And, we then saw a few months ago the LAMF SPAC led by George Soros' nephew, Jeffrey Soros, targeting an Everton takeover. And those talks seem to have evaporated in favor of a minority private equity investment from MSP Sports Capital. And I guess the only data we have here, which we didn't talk about on the show last week, which might not be a perfect correlation, is FaZe Clan, which is down about 89% from its SPAC merger in July 2022, which is also, maybe more indicative of a broader market wipeout. Prediction number 3. After corporate owners Nintendo and Disney, who, if anyone will recall, used to be some of the big names among North American pro sports ownership, left the ownership space, we will actually see the reemergence in the form of an Amazon, an Apple, or a Netflix. Joe Pompliano's Substack Huddle Up actually had a really good breakdown on his newsletter probably a few weeks ago on Disney's ownership tenure with the Anaheim Angels, now the LA Angels, with the Mighty Ducks of Anaheim, and kind of highlighted the reasons why, the entertainment conglomerate failed to live up to the expectations, obviously, that come with all the resources provided by a large company like Disney. And you've had other media companies like News Corporation and the LA Dodgers, AOL, Time Warner, and the Atlanta Braves, the Hawks, the Thrashers. You had the Seattle Mariners and Nintendo, and all of those companies have exited for various reasons. And that kind of leaves us with the only remaining true corporate-owned teams are actually the Toronto Blue Jays, owned by Rogers Communications, big telecom in Canada, and then the Atlanta Braves and Liberty Media. In European football, we have Deutsche Telekom, are one of the 4 long-term partners of Bayern Munich, and that's along with Audi, Adidas, and Alliance. And so why, after 2 decades of corporate ownership transitioning out of the sports business, why might these companies seek to re-enter? The answer is just sports content is king. And I truly believe that sports is the only form of live content we have left on this planet, and the only one that is really capable of guaranteeing a certain audience to advertisers who are looking for it. And I think in search of this sports content, we've seen Apple enter with Ted Lasso shutout and their Major League Soccer deal. Netflix has obviously emerged with their Drive to Survive, very popular documentary, Full Swing, now the PGA one, Breakpoint with the ATP. And what really brought me on this topic was just the news that in the middle of November, we had Apple kick the tires on a bid to acquire Manchester United. Obviously, we know now that they didn't submit one of the final bids and they're not in the running, but I think it just goes to show you, the thought processes that some of these companies are having. And we then had the news in November that Netflix was exploring league ownership. And the company late last year was actually in talks to buy World Surf League. But negotiations fell apart because the 2 organizations could not get an agreement on the price. And I just feel like this is the most likely outcome here, in an effort to bypass the just soaring costs of bidding for sports rights. I have a feeling that one of these platforms will just go straight to the source. With the ATP having long been rumored to be exploring investment partners, including CVC Capital, and that one's kind of disappeared a little bit, but that one's dated back several years. I think that the ATP and Netflix is a partnership that I would personally love to see. Okay, prediction number 4. Sovereign wealth, and I think obviously the elephant in the room, we're all talking about Middle Eastern sovereign wealth, enters North American sports, but is only interested in the NBA and only gets a deal done in the NBA in 2023. So technically, there's actually already Middle Eastern sovereign wealth involved in North American pro sports. Flash Entertainment in Abu Dhabi and Mubadala have both invested in the Ultimate Fighting Championship in the past. And among the big leagues, the only team ownership that has had any exposure to these funds is actually in Major League Soccer. And New York City Football Club is a member of City Football Group, which is operated by the Abu Dhabi United Group and His Highness Sheikh Mansour bin Zayed Al Nahyan. And so, as a bit of background, that kind of prefaced this prediction, Bloomberg reported back in, I think, early December that the NBA has formally allowed pension and sovereign wealth funds to buy team stakes. And what we'll actually have to remember is that this is not the first time that this has happened in the NBA. People might remember that the Ontario Teachers Pension Plan actually used to own 79.5% of Maple Leaf Sports Entertainment, the ownership group of the Toronto Raptors, and they sold that stake to Rogers and Bell in 2011 for $1.29 billion. And at that time, that was the largest sports deal ever transacted. But similar to how Platinum Equity has owned the Detroit Pistons and Dundon Capital Partners has owned the Carolina Hurricanes years before the leagues actually introduced a proper private equity framework, it appears we now kind of have that framework in place for the NBA for sovereign wealth. And why is the timing appropriate? Well, investors from the Middle East have obviously shown themselves to be pretty keen and capitalize on, the revenue potential and try and capture sports kind of increasingly global reach. Some of the best known examples of this, and I'm sure everyone listening on the podcast has heard of these, but we have obviously Manchester City in England and in PSG in France, which is backed by some Gulf states like Qatar. Last year, Saudi Arabia's public investment fund took over Newcastle United FC, another one of UK's historic clubs. And according to a report from Bloomberg and Front Office Sports, the Qatar Investment Authority and Abu Dhabi's Mubadala Capital have both shown interest in NBA teams, according to Bloomberg. And so the funds have a respective 450 billion and 284 billion in AUM. So why stop at the NBA? Well, this one's just a hunch, but basketball and the NBA have really become global in a way that I don't think Major League Baseball or the NHL have really been able to manage. And out of all the North American leagues, the NBA has the largest presence in the Middle East, with the Abu Dhabi games being played in 2022 and in 2023. And I'm betting something is consummated here in 2023 in the NBA, but not in the other North American leagues. So I'm going to kind of cop out on prediction number 5 because initially it was that Fenway Sports refocuses on the NFL and the NBA. And unfortunately for me, this one's already wrong, but let me at least try and explain my thinking here. So towards the end of 2022, we were getting reports that Fenway Sports Group was selling Liverpool and the Premier League. And Bleacher Report had reported that Fenway is the leader to bring the NBA to Vegas with LeBron James. He's always expressed a pretty good degree of interest in that one. And Front Office Sports has also reported that John Henry, the owner of FSG, is also interested in buying the Washington Commanders that are for sale in the NFL. So it appeared when we first made these that, at least for that moment, that this is the way we were headed, transitioning out of the Premier League and kind of doubling down on North American sports. And, in the last podcast, we talked about FSG's attempts to undertake a public offering. And these are very clearly assets in the NBA and the NFL that would go a long way to create a very viable public market business for FSG. And it kind of appeared that FSG just preferred the stability of North America's closed league structure. But, this week we got the news from Sky Sports that FSG is not selling Liverpool and that they're instead looking for a minority investor. And one would just have to think that it was probably not prudent to put the whole team up for sale while the Man United sale process was undergoing. Obviously that's kind of the belle of the ball at this point in time. And, aside from my failed prediction here, I just think the biggest takeaway is what on earth is going on in the Premier League. United is for sale and by the Glazers, and the bids were due to the Rain Group last week. We had Aries Management and Elliott Management and Oak Tree all being rumored to be offering acquisition financing to the parties involved, such as Ineos founder Jim Ratcliffe. And deep kind of within the takeover is a battle so that at least one major club, can kind of find its way into the hands of an Englishman, and not American ownership, not Middle Eastern sovereign wealth. And Qatar has discussed both Manchester United and Tottenham, and apparently could get both, as son of former Qatari Prime Minister Sheikh Jassim bin Hamad Al Thani has bid for Man U, and then Qatar Sports Investment, who are the owners of Paris Saint-Germain, are looking at Tottenham, which has really frightening Champions League implications. And, MSP Sports Capital has flirted with both Everton and Tottenham, which have emerged in talks. And this week it was revealed that John the Jaffe, chairman of MSP, is writing a 3.1 billion GBP offer to buy the Spurs. And I just can't tell whether the smart money is exiting or entering here, and it's all pretty confusing. But we'll definitely see how this one plays out. Prediction number 6, it's that the NFL's Washington Commanders and Dan Snyder will set a record sale price for the value of a pro sports club. And I can already sense the feedback here. And I admittedly will agree that this one's a bit of a softball on my part. Of course, the Commanders are going to fetch the highest sale price. My only pushback here, to play devil's advocate, is just that with the sale processes going on around the Premier League, with Manchester United, and the news of a Qatari bid reaching upwards of $6 billion, I think we're well within the wheelhouse of a Commander's price that could actually put this prediction in jeopardy. And Front Office Sports reported earlier this month that the highest offer we had through the first round of bids for the Commanders was $6.3 billion, so marginally higher than that of Man U, and that would be a worldwide record for a sports franchise, $1.6 billion more than the Denver Broncos sold for last year. The rumor is that Snyder appears to be holding out for a $7 billion bid for the franchise, says Front Office Sports, and I think there's some pundits out there that say the Commanders could fetch as much as $8 billion. I think we'll see that number fall closer to the lower end of the spectrum, and that could actually put this prediction in some jeopardy. Prediction number 7 for 2023 is purpose-driven and thematic investing emerge in pro sports ownership. And I think that we kind of had the early innings of this a few weeks ago. There was some news where actually an Italian-American multi-club football model, Brera Holdings PLC, IPO'd on the NASDAQ, raising $7.5 million to target a global portfolio of emerging football clubs across Eastern Europe, Africa, and South America. And I think setting aside the development where this obviously marks another MCO trying to tap public markets, I just think the most unique thing here in reading the filings was their investment thesis, where they're targeting economically sustainable clubs with a social impact approach. And, this obviously follows the news of African American Sports Entertainment Group seeking to bid for both NWSL, they lost out on that, but also WNBA ownership in Oakland, and LA-based tech CTO Nico Sparks leading a syndicate of 75% of people of color for a bid for the Ottawa Senators. And I just think the underlying theme here driving this prediction is that as the sports PE market matures, we're really going to see purpose-driven thematic investing emerge in ownership. And addition into this being an asset class, sports is also undoubtedly one of the largest platforms to accomplish these initiatives. And I think we can expect something probably backing women's leagues like the WNBA, NWSL, PHF, or even female ownership and female owners in the Big Four in European football. My PE friends definitely will not like me for this one, but prediction number 8 for 2023 is no exits for private equity in 2023. And this builds on a post we had on LinkedIn back in December. But, I think when private equity first entered the pro sports landscape, many and mine initial thoughts were just, well, where's the liquidity going to come from? And we've also had the recent news around Blue Owl Capital and Dial Home Court Funds early exit, and their early win through Matt Ishbia's $4 billion purchase of the Phoenix Suns. And for me, it just feels like that this deal is the exception and not the rule on how we're going to see future PE exits in the pro sports space. And private equity was first introduced into the North American leagues as a buyer of last resort for illiquid passive minority stakes that were priced above the means of high net worth investors. And I just don't think we've seen that many teams entertain public market offerings. Out of 152 sports franchises in the United States, 3 are publicly traded. That's less than 2%. And there's obviously the community-owned Green Bay Packers and not a real exit possibility. And while Monumental Sports, Ted Leonsis, has publicly stated he sees MCO kind of as a trend that leads to an IPO, I just think the North American leagues are still really incredibly secret around their books and detailed financials. And, there ultimately needs to be a buyer on the next rung of the food chain. Maybe the NBA's decision to allow pension funds and sovereign wealth into the league is a model for other leagues to follow and might cause some PA exits. But in the absence of IPO, in the absence of maybe a control M&A transaction where we have minority LPs that are PE here, I think the Suns deal is more a flash in the pan than a real data point to sell LPs. So prediction number 9, private equity does not enter the NFL. And I think the premise behind this one is sort of simple. The pool of potential owners is definitely shrinking as valuations rise. Fewer individuals have the money to buy in. And I think in the past, finding LPs never used to be a massive problem. High net worths were pretty eager to write checks for small passive stakes in clubs and, prefer the benefits that were associated with that. But as these club valuations have grown, so too have the price tags associated with those limited partner interests. And a 5% stake in an NFL team now costs 9 figures. And in many cases, these LPs are receiving sort of dwindling rights and recognitions for their investments. So John Wall Street had a really good column on this. And I think the prevailing theory and thinking around the league is that they will open their doors to institutional capital at some point. I think many NFL observers believe that the catalyst for this change will probably be, a team sale that has, reduced demand or a limited number of bidders. And then the league, finds themselves in a situation where they're not able to ascertain the price that they have sort of come to expect given the significance of the league. And so until that happens, I doubt we see the change. But, I'd say the last thing here is just that we've definitely seen some rumors in the last year and a half that some private equity funds were trying some unique structures to get access to NFL assets, backing certain individuals to try and subvert rules. And I doubt that the NFL falls for something like that, but I guess you cannot blame the lack of trying. And the last prediction for 2023, there is no expansion in the Big Four in North America this year. And we briefly touched on this last episode. We were talking about the sale processes surrounding the Angels and the Washington Nationals. And while I think that the MLB would love to expand, I just think that they have way too much on their plate dealing with potential relocation candidates in Oakland and in Tampa Bay. The NBA, while definitely on their radar, the focus for them this year will be on wrapping up their new TV deal. The NHL has just recently undergone 2 expansion franchises in Las Vegas and Seattle. And, while they may have set the table in terms of markets for the NBA, and Gary Bettman has even floated additional, expansion opportunities, Austin, Houston, Quebec City. I think it would have to come with greater changes to the league and the playoff format. And then lastly, the NFL, while Roger Goodell teased a 14 European division while they're on tour with their international games in London and Munich, this one just doesn't seem to be imminent this year either. Well, that's it. There you have it. 10 bold, maybe not so bold predictions for 2023. Excited to follow along with you guys and see just how right or wrong we'll be by the end of the year. Thanks for listening to the Owners Club podcast. Make sure to subscribe to the show and leave a 5-star rating. Sign up on our platform, subscribe to the Owners Club newsletter, and follow FanClub Sports Capital on your favorite social media channels to join the largest community of pro sports owners. This is FanClub Sports Capital founder and CEO Dave Mirynech signing off. And we look forward to sharing more sports finance and M&A news with you next time on the Owners Club podcast.